Okay, so welcome to part 4 of Symax Fintech's weekly market insight. This is where we just go through doing some analysis on a variety of asset classes and products. As usual, our disclaimer: trading involves the risk of loss of capital, not suitable for everyone. If leverage is involved, just be aware you can lose substantially more than your initial investment. Views everything contained in here purely for educational purposes. We are not trying to encourage you to trade or invest. That has to be your decision. Before you make that, carefully consider the risks involved, your financial situation, level of experience and appetite. Risk appetite, that is. And of course, only risk capital you are prepared, but more importantly, you can afford to lose. And of course, if you're not in that situation where you haven't got the capital to trade, then reach out to us anyway, because we have a partner that can help you with that with a funded account if you can qualify by passing their challenge. And if you've got any doubts whatsoever, seek independent financial advice before you risk your capital. Okay, so this is the technical analysis section. So on the chart legend, right hand axis, we've got black numbers, which are support and resistance levels off of trend lines. Brown numbers are going to be breakout levels. Claret numbers, they're either ones where I've identified where there's support or resistance in the market, or they're based on double or triple tops or bottoms. Please also make a note of the pivot point colors. And there are 1 or 2 Fibonacci's in there this week as well. So just bear those colours in mind, because they will essentially merge with a couple of the others I use. Okay, so we're going to start with the Dow. Now, you know, stocks held up on the previous week's gains last week. You know, it was a short week. Probably the one that was less inclined to stay up was the Russell. And again, just remember, you know, they're sort of small cap companies, so they're much more sensitive to consumer demand and what's going on. Whereas the giants can sort of take a little bit of time to even notice that demand's dropped off just because of the size of their balance sheets and obviously the size of the orders that they continue to have. Okay, so when we look at the Dow daily, I've got resistance at 34,297 and 33,857. As you can see, I've got the Fibonacci levels on here as well. Support I've got at 33,507 and also at 32,659. Now, when you look at the Fibonacci levels, you know, when the sell-off came, it sort of got just below the 50. Never got down to test the golden ratio. We're now above the 382, maybe going back up to test the higher levels, or we're going to come back and test the 382 again. Okay, when we look on the 30-minute, I've got resistance at 33,776 and support at 33,586. And 33,508. Now, you know, just remember, I mean, you can see that sort of volatility that there was at 1:30 on that. That's the candle before last. And you know, that was because, one, they had an early close, but there was thinner volume in there, less traders in there over the data. So that's why it had a bit of a pop down and then a big pop on the upside as well when the rest of the earnings and everything came through from the NFP. Now, so, you know, you're going to see that with a little bit of things that have been going on. So it was an early finish for the stocks on Friday, and the commodities didn't even open on Friday. Okay, so moving on to the S&P daily, 4168 resistance, 4,005 support, 3809 support, and again you can see that the Fibonacci's are on there just for you to be able to sort of just see how the markets are gauging against those. For the 30-minute on the S&P, I've got resistance at 41.47 and 41.46, two different lines there. And I've also got support at 41.21. Now, just remember, you know, for the dailies especially, you can take screenshots or just shoot them with your phone so that you've got them available when you need them. You know, the daily ones don't necessarily change every day, so you know, you can sort of work off of them. So looking at the Nasdaq last week, so last week, so I've got resistance for this week at 13,581, 13,387, support at 12,695. And again, you know, Nasdaq finished steady. It had much more of a stronger boost during the middle of the week, but then it sort of just dropped off towards the end of the week, but it still finished okay. Looking at the 30-minute, I've got resistance at 13,192, support at 13,124 and 13,017. Now, the Russell, you know, is close to testing that golden ratio, you know, on the upside this time rather than the downside. Just remember, you know, every line is a resistance line when the market's below it and a support line when the market's above it. So on the Russell, I've got resistance at 1813, support at 1754, and also 1692. You know, it's another reason why not to just sort of take all your chart levels off as soon as a point is broken, because sometimes they're used as a retest as well. On the 30-minute for the Russell, resistance at 1794, 1785, and support at 1753. As usual, looking at a couple of currencies. So this is the pound against the USD. Sort of USD's in limbo a little bit at the moment, a little bit on the up, a little bit on the down. The pound performed quite well last week though. So I've got resistance at 126.06 and 125.49 with support at 123.65, then much lower down 119.21. Looking at the 30-minute, I've got resistance at 125.00 and 124.72 with support at 123.99. Moving on to the euro against the dollar, it still struggles to stay up above that 110 level, doesn't it? So I've got resistance at 110.35 with support at 107.52 and 105.30. The 30-minute for the euro against the dollar, I've got resistance at 109.61 with support at 109.08 and also 108.37. Now we're looking at Bitcoin as we do every week, and we're just sort of looking at Bitcoin on its own to start with, and then we also compare it to Nasdaq. But at the moment we've got Bitcoin sort of elevated, you know, partly because of what went on with the bank failures recently, and it just does seem as though it's become that digital gold for the moment. You know, hopefully it'll keep that shine. So resistance I've got at 29.421 with support at 27.829 and 25.340. Now, if it does drop for any reason, you know, personally I can't see it, but if it does, I'll put those other levels in down there, because again, these are ones that you can just keep from week after week for the moment, where there's a gap at 21,260 down to 20,080. On the 30-minute, I've got resistance at 28,338 and 28,109 with support at 27,910 and 27,770. And here is that Bitcoin versus Nasdaq on a daily. You know, that it is a loose correlation. It's not tight, and you know, just be aware of it. But you know, if you're going to try and trade it, be really careful. Okay, so we're moving on to gold. Gold had another strong week, as you can see, and you know, pushed up. It hasn't quite got to the highs that it got to last year of 2078, but it's done a good job of trying. So I've got resistance at 2051 with support at 1980 on the daily. And then on the 30-minute, I've got resistance at 2032 with support at 2019 and 1995. Now, although it was a strong week, just remember that commodities, including gold, were closed on Friday, so they will be playing catch up. So WTI, I've got resistance 82.69 and support at 75.72. You know, you can see that gap in the market. It did spike up, obviously, after last weekend's OPEC plus cut of over 1 million barrels a day. Did it have the desired effect? It's steadier. Yeah, it's back about $80. I still believe that they would have expected it to go up 85 and people talking of $100, and that hasn't happened. You know, it was a surprise cut. So anyway, let's have a look at the 30-minute for some levels. So on the 30-minute, I've got resistance at 80.66, support at 79.61, and then 79.01 is a breakout. That breakout is a gap all the way down to 75.72. So as I just mentioned, you know, in last week's report, there was that surprise OPEC plus cut of over 1 million barrels, which is going to remain in place until the end of this year. And, you know, that is 1 million barrels per day. And of course, you know, that spike, yeah, it was a spike, but it was nowhere near what I believed that the impact that they was hoping for. So it's steady, it's stable, but for me, all it's done is gone back into that 72.82 range for the moment, because it couldn't even break that 82 on that news. Got close, but you know, 82 and a bit anyway. So you know, again, just look through your charts and just keep an eye on all that. So I hope you've enjoyed the analysis. I hope you've enjoyed this complete report that we do. You know, even though it's Friday, well, you know, it was Easter weekend, or it is Easter weekend when I'm recording this. You know, we still want to give you this chance to prepare for the week ahead. So if you do want to prepare, then apart from this, then a great thing to get is our daily newsletter, because that includes fresh chart levels, fresh pivot points every day. Plus you get all the global news and you get some up-to-date views from me as well. If you've got any gaps in your trading skills, or you know, you'd like to learn a new asset class, or just improve on one element even, then we do a series of one-day workshops to help you with that. Now, 1 week course is very intensive. You know, you can come in as a novice. By the end of that week, you feel much more confident with your ability, and it does give you that real good basic foundations to build your trading career on. If you really want to turn trading into a career though, then our accredited comprehensive masterclass is going to be the one for you. That's going to provide you with all the knowledge and trading tools that you need to sort of navigate today's markets, not just today's, but the ones in the future as well. And not only that, but we cover all the different asset classes, so you'll gain those skills for anything that you want to trade. Now, Trader mentoring, again, that's, you know, just for those that are looking to, you know, accelerate their learning or to get to that next level. I just help to fill in the gaps. I just look at what you're doing already and make suggestions on how you can improve. And of course, we can all improve. Consulting, you know, again, that's for, you know, where we're helping individuals and companies hedge FX and commodity exposure. Educational purposes, you know, our courses and just even content is available to individuals. We also provide it to exchanges and brokers. And of course, you know, if you are looking for that funded trading account, then we have a partner that is what I like about them is the fact that they don't put a time limit on you achieving their challenge. And that's really important, because there's enough pressure on you generally, let alone putting that pressure on where you've got to complete one of these challenges in 30 days. It's just not fair as far as I'm concerned. Okay, to contact us, info@symaxfintech.com. Anything you'd like to ask me personally around trading, chris.tubby@symax-int.com. All I can say is have a great week. Hope you've had a wonderful Easter. Just prepare yourself for next week, and of course, be lucky.